Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. I think the best way to sum up everything you see here right now and everything that's going on in the market is everything here on the left side, the bullish factors, is massively outweighed most of the year by everything on the right side. Basically, projection levels are getting so high in the United States and South America and just globally combined that with the massive harvest coming out of South America, what we're projected to see here in the US, all of that weighs so heavily on the market all year long that what you see on the left, these disruptions, good sales, crop ratings that are actually relatively low compared to years past. Those things, the accumulation of sales throughout the year and the smaller weather issues that are impacting yield, that will lead to two things: tighter stocks at the end of the year and lower production than what's forecast. No, those things just don't seem to impact the market until the numbers are released. So we'll go all year long based on these lofty projections, and we'll see the stress on the markets that everything coming out of South America will bring to prices, and then the adjustment will come, and that'll give a small window for great sales. That's the real imbalance in the market right now, because production is so great and growing globally. We essentially need some kind of massive issue to drive prices higher during the year. Otherwise, if with short of that, we're left waiting for the USDA to make its final adjustments to tighten stocks because sales were so good throughout the year, and to lower production numbers because some of these issues you guys had throughout the year that were glossed over are finally accounted for, and that's a real problem. So obviously that was masked in recent years from COVID inflation and then from the war in between the Ukraine and Russia. But absent those massive bullish stories and events, we're just left with massive crop coming from all over different parts of the world. And that's really what's happening right now. Safrinha crop is now, or harvest, Safrinha crop harvest is underway in Brazil. That's just bringing more corn in the market at a time when Argentina's corn is already well below ours. And ours is low price because, and helped right now because of the weak dollar. If we didn't have a weak dollar, we'd be even more uncompetitive with what Argentina's kicking out right now. And now you add Brazil bringing a massive safrinha crop that's just starting to come to the market now. And then, you see a small improvement in spring and winter U.S. wheat ratings, and the market reacts immediately to it. Any kind of negative, it just takes a lot more for the market to get bullish right now. You'll see here in a moment with prices, as soon as these ratings come out, we have a reverse of yesterday. We had a little bit of strength, and it's gone now. The improvement in ratings with both spring and winter U.S. wheat, even though spring wheat is still pretty poorly rated, that improvement immediately sends the market downward and is reversed. And that's because anything positive, as far as conditions, it's just immediately the with the weight of the production levels we're seeing, it's immediately taken a lot more seriously than anything that could potentially be bullish. Taking a look at U.S. weather, storms from Nebraska to Iowa, Minnesota, and Wisconsin. Some of these storms could be looked at as severe. Nothing right now that's considered too problematic. We keep hearing possibilities that it's going to dry out and get warmer. The dryness really doesn't seem to be happening anywhere. If anything, when it comes to precipitation, it's become too much rain in some places, as opposed to a lack of rain, especially after they started to get rain in Nebraska, which is where we saw the drought forming to the furthest degree. As we get rain in places like Nebraska, in the Midwest, Great Lakes region, as long as it's not excessive, it's welcome. Um, we are seeing temperatures warm up, but without any extended dryness, none of this really becomes problematic. France has seen a very long stretch of hot and dry weather that is stressing their wheat crop. This is obviously a problem for them, but globally, just a drop in the bucket as far as wheat production and not an overly large issue. Continues to be dry in North China plains, stressing their corn and wheat. That is as yet not become a problem as China's demand is way down for grains. This is something that I think will show up later after they struggle to produce their own crop. They'll turn to importing from other countries later, but it's not something the market's accounting for right now. And then Argentina, the drier weather is beneficial right now after they fell behind a little bit on harvest. So think about that. They're already low priced, even with the issues they had, harvest and delays and flooding there. Prices coming out of Argentina are probably only going to get lower as Brazil gets their crop to the market. So nothing but positive weather in Argentina as the dry weather aids harvest and also is helping with the winter emergence of their crop. Taking a look at overnight prices, a complete opposite of yesterday when at this time wheat was up and it brought corn up a little bit with it. And while beans were down, bean market has had some of its fears eased by talks on the slate for between Trump and Xi of China. And meanwhile, wheat is now back down as fears about crop rating subside, and corn is pretty much a faller right now. So as wheat comes back down, it's taking corn down with it. Compared to the last 24 hours, this time yesterday, corn is down overall about 8 cents. Beans are up about 1, and wheat is down about 4. That is all for today. I hope everyone has a great day, and we will talk to you again tomorrow.